Welcome to another interview session of the Crypto Spendthrift podcast. I'm here with Alexander Kravets. So I want you to introduce yourself, tell us about you and what you're doing here.
Awesome. Cameron, thanks very much for having me on the Crypto Spendthrift podcast. Great to be here. My name is Alexander Kravets. I'm the CEO and co-founder of a company called Xtrade.io. And what we're doing is very simple. We're taking existing financial technology and bringing it into the crypto space to kind of fix some of these issues that most people experience when it comes to cryptocurrency trading. So very basically, my background is in proprietary trading and running a brokerage firm. So I started off as a trader, and then the stuff that we used to trade, we basically used to have other people come in and trade with. And then we built a brokerage firm, a clearing firm. We did high-frequency trading, retail brokerage services. We were doing several percentage points of NASDAQ trading volume every day. I basically, as the firm grew, I had to wear the next hat every time we had a new project. And so I learned a lot of the stuff over about 12 years. So ranging from high-frequency trading to market data to colocation to settlement to risk management to retail operations to customer service, trade desk operations, hiring and firing 100 people, just everything related with the equities market, the entire vertical I'm very intimately familiar with. And so when I started trading crypto in 2017, I immediately saw some of the problems that are in the space. A few of them are, obviously there's over 100 different markets. So the same asset like Bitcoin will trade at wildly different prices depending on the market because it all clears internally within each market. The interfaces really kind of suck. It's just a bunch of web pages. And so if you have multiple exchange accounts, you have to open, 5-10 web pages to trade, and you have to click through all of them.
Some of them are very slow.
Mouse, which is insane, and they're slow, and you only have like limited market orders. Sometimes you don't even have like trailing stop orders or stop orders, which are very basic. And if you have like a 24/7 market, you have to wake up at 3 a.m. to sell your Ethereum. It's kind of a joke, And then from there, like if you're building a computer program to trade, which is what my clients used to do and what I used to do, you have to write to each exchange's API individually. So if you have a Kraken account, you have to write to Kraken's API. Then you have to write to GDEX's API, to Gemini's API, to Bitfinex's API, to Binance's API. And so you literally have to, it's like going fishing and you have, a tuna boat and you have 50 rods to untangle before you start. That's a big problem. There's no cohesive environment for trading as far as a platform, as far as an API, as far as liquidity. In the equity markets, obviously, that's very different. There's standards. Everything kind of trades in one place. Everything clears in one place. You always get price protection. Not so much in crypto. So what we're doing is essentially releasing 4 products to fix these problems, and the products are coming from the Wall Street space that we're very familiar with. We've built, maintained, and used these products in every way imaginable. One is a universal API. So, for instance, if you have multiple exchange accounts and you want to write a trading program, or you want to connect your existing trading software to a crypto exchange, you have to write to their API, and each exchange is a different API. So we're basically building a middle layer that writes to every API for market data and for execution. And that's based on the FIX protocol, FIX, Financial Information Exchange. That's been around for 25 years in the finance space. Every system that trades uses that protocol to communicate with every other system. Just a matter of literally, what's your FIX spec? Okay, let's go. We certify, we go. And in crypto, that's not there. So by doing that, we're basically creating a very easy on-ramp for existing financial players to enter the crypto space because they already code to that API over and over and over again for like over 20 years, and it works. So we've already built this. It's already in production. It's across several exchanges, and we're adding more. And that's going to be our first product we release with our token generation event in Q1 of 2018. The second product is Xtrade Pro. And what that is a downloadable platform, like an actual program that you download on your desktop, you open up, you log into, and then it'll take all the market data from all your exchanges and all your account information and put it into one place, like one order book. So basically, you'll be able to trade across all your exchanges without having to open multiple web windows to do that. And not only that, but you'll be able to use keyboard shortcuts to trade. So you don't have to like click through this one and this one and this one. You just hit one button, and then your order will go out to the best prices across all the exchanges you have accounts. If you want to create custom keyboards shortcuts for custom orders, like sending orders above the best bid or below the best ask, or sending a reserve order where you basically want to buy 100 Ethereum, but you want to only show one, or even buy one and only show 1/10. You can do that without kind of moving the markets by showing a larger quantity. So that's very important, and that's going to be released later in the year. The third product is called Xtrade SPA. It's a single point of access. What it means is that if you have an account at exchange that we partner with, then you can actually trade across Xtrade's liquidity pools across all of the markets. So we're going to open accounts everywhere else, and you'll be able to send us an order from one exchange. We'll do a trade, and we'll deliver it to the exchange where you are. And so we're not actually an exchange, we're just a delivery system. But by doing that, you'll be able to basically trade everywhere without having to open multiple accounts. The fourth product is a dark pool. So if you're an institution and you have to buy or sell, or just an individual, buy or sell 5,000 Bitcoins, you have to pay an OTC broker to do that. It'll cost several percentage points. And also it'll move the market, and also it'll take some time, and it's not easy. So we're creating a matching engine to kind of match orders that are large in the dark environment so that they don't move the markets too much, and that you can actually aggregate retail orders, for instance, and fill them in one batch. And this is a great institutional product, which is not there at the moment. We're leveraging our relationships with banking partners to facilitate cash in this transaction. So you'll be able to open an account, wire money, do a dark pool transaction using our matching engine, which will not be visible. It'll be private, so it won't affect the markets as much, especially if it's a large order. Because if you put a large order on like GDAX and it's like, $10 million, it's going to kill the market. But this way, it's basically executing normally, without having to disturb everything. And then we'll be able to actually journal the funds and wire money back and forth. So that this is a very simple, very necessary product, and that's going to come out later in the year as well. So essentially, we're Wall Street guys that are building technology to leverage blockchain ecosystems to create trading opportunities and create technologies that mitigate the space to allow trading to occur in a faster, more efficient, and easier fashion for not just existing crypto traders, but also players that are on the side that can't enter because the space is so messed up. And so that's kind of what we're doing. Sorry for the long intro, but hopefully that kind of clarifies some of the things that we're working on.
That's fine. It gave a pretty broad overview.
Sure.
And the first point I'm going to hit is kind of that Wall Street experience. I kind of want you to compare this Wall Street experience with kind of the things and like the mentality you're seeing in the crypto space, because it's pretty obvious that people in crypto kind of have definitely a different mentality than like traditional traders and such.
Yeah, I mean, the crypto space is very much all about individuality and kind of protecting what's yours, as far as not wanting to have a lot of regulation in the space, making sure that people are free to transact without borders, without having a third party, the whole decentralization ethos, which is really great. And so that's opened up a whole new world of opportunities. It's created amazing projects. It's created brand new technologies that have been, appeared overnight and have been valued at billions and billions of dollars. And obviously that's happened not just in a local place, like one particular area, like the Bay Area or, whatever the hub might be for technology companies. But this is a worldwide phenomenon that's really harnessed the power of the global, ecosystem and, I guess the adventurous, the adventurous nature of technologies that are creating projects in the space, and that's been amazing. But the problem with on the trading side of this kind of environment is that because it's so decentralized, because it's so highly fragmented, it's not conducive to liquidity. It creates violent movements in prices. So imagine a Bitcoin traded in one place, right? So like in equity markets, let's say you have multiple actual exchanges, but they all communicate with each other. Like if you send an order to one and there's a better price somewhere else, they'll reroute your order to a better exchange. So you get a better price improvement. That's like an SEC regulation, right? So you're always protected. But in crypto, you don't have that because each trade settles on a different exchange individually, right? Yeah. It's not going to move to a different exchange. And so that creates a situation where there's like Bitcoin trading at 100 exchanges at 100 different prices. And when there's a large order at one exchange, it kills the price. And so that creates very violent price movements. And so we need some mitigation. There has to be some level of communication between these exchanges. And that's kind of what we're building, the ability to transact to multiple points with one account. And on top of that, I don't believe in enormous amounts of regulation. I was registered for many years. I had a Series 7, 55, 63, 24. I was a supervisor, a principal, a proprietary trader, a stockbroker. I mean, you name it, I had a license for it. And I'm not, I've seen the other side of where things are over-regulated, where the government or self-regulatory organizations overstep their bounds. Where they're driven by budgets that are defined from how much fines they collected, which is a enormous conflict of interest that nobody really cares about. And so obviously regulation should be very, very thought out. But I believe that some transparency has to happen because some of these exchanges, you take your money out. Literally, like you have to write a support ticket to get $100,000 out. They don't talk to you. It's like if I was sitting at a trading desk and somebody sent me a wire request form for $50,000 and I didn't send it to him, I'd go to jail. Because I'm literally not holding this guy's money. It's illegal. In crypto, you don't have that. It's just like, hey, sorry, write us a ticket. And people are just used to that, and they think that's a de facto normal thing where they'll send it to us eventually, or hey, what can we do? But I don't think that's right. I think there has to be some level of transparency. I think some of these exchanges should have to register in these jurisdictions. I think there has to be accountability to people who open accounts and send money to people. You can't just like have a situation where the free for all, where hey, I'm sorry, we don't want to hire people to help you. That's your problem. That's kind of wrong. So I think the needle has to move maybe 20% towards the regulatory side compared to where it is now. But I think that's kind of a good point. And for us, we're just building trading technology to make the trading a lot easier. So that's kind of the differences that I see in the space, and some of the synergies that might be leveraged to bring it a little closer together in the way that benefits the population that is active in the space without jeopardizing their freedom and their anonymity and their ability to transact borderlessly with low transaction fees.
All right. Yeah, I definitely agree with your assessment. I always think that exchanges are really the kind of key point of failure that can happen in the crypto space. I mean, we've already seen like an exchange gets hacked and just millions are lost, or something happens to an exchange, like your funds are locked up for an unknown amount of time, you're just stuck. And like you said, sometimes you are forced to pay a premium just because you're using one exchange over another one, because the prices are constantly different and they never set in stone together. So I think that is one good thing to bring from a more traditional market to crypto. Yeah.
And the other thing is transparency. If you're an exchange, you literally don't answer to anyone. So if you want to just maintain a larger spread and make markets, you can do that and nobody knows. If you want to take a customer's order and buy ahead of it, it's called front running. It's highly legal in the regular equity space or in the regular stock markets. You can do that and nobody will stop you because nobody's regulating you. So there has to be some level of transparency. There has to be some sort of reporting that's done by an exchange to some sort of regulator or state agency or some sort of country that says, hey, this is what we're doing, this is where the orders are going, this is how we're not stealing the person's money or making this price artificially higher. That has to happen, and until that happens, there'll be sort of a lack of trust. And you even saw that with some of the recent commentary by the SEC and the CFTC, and immediately the market rebounded because there was some regulatory certainty around it. So again, my position is very simple. I really feel that there has to be more transparency to kind of mitigate some of the bad actors that are in the space, but not to a point where it stifles innovation and allows for borderless, frictionless transactions. So I guess kind of a realistic standpoint that everybody may not agree with, but hey, that's kind of where I'm coming from. So yeah, kind of like you. So that's it.
So keeping on kind of the topic of exchanges, I know your platform's going to be interacting with a lot of exchanges, and sure. I'm sure there's going to be a decent amount of risk associated with some of these exchanges. So what do you think is kind of the, criteria before you be able to accept exchange? Because there's some exchanges that are more smaller altcoins, and then there's sure. also kind of want your opinion on decentralized exchanges. So will they become a thing, since they're not really as easily regulated?
Sure. So as far as which exchanges we kind of work with, so essentially on a technology standpoint, we write to every exchange that's there that has volume. As long as you have an account there, you can trade. We don't really bother to kind of vet them in that way, because we're just kind of making sure that they're able to transact. And if you have an account there, you can trade. As far as our liquidity aggregation product, obviously that will be much closely vetted. Because we are moving funds around, and so from there we're going to work with exchanges that have a strong infrastructure, that have some level of transparency, that have significant amount of volume, that have a trusted factor to them, that don't go down every 4 seconds. And so that's important. So that kind of limits us to a subset initially, but we think that in the next year or two, there'll be a lot more infrastructure that's being developed around these exchanges, and if you don't have that infrastructure, if your exchange goes down, if you can't effectuate transactions, if you don't send people money, people are going to migrate accounts elsewhere. It's just like natural market forces. And we think the better places are going to rise up and the worst places are going to die off, and there'll be some consolidation. Because right now there's just too many, and most of them are Not I shouldn't say most, but I think a lot of them need a lot of help. And I think unless they effectuate that process sooner than later, they're going to have some problems. As far as your second question, decentralized exchanges. So decentralized exchanges are fantastic, right? So theoretically, there's no middleman. There's nobody to kind of sit in the middle and be the bad actor and take people's money and sort of effectuate these nefarious situations. But the problem is that there's lack of liquidity, and really there's very few. I think literally there's like one or two decentralized exchanges that work. Everything else is, hey, we're going to build it in the next 3 months, So the problem again is liquidity. So unless somebody's on the other side of that trade, you're not going to, no one's going to be there. You're not going to be able to transact your NEM token for an ARC token or whatever. And the other problem is, you can't have funds stolen. Still, like Ether Delta was phished. People were able to take passwords, and because you're actually linking your wallet to the exchange, you're physically that's not just an exchange wallet, that's your physical wallet. That could be a problem as well. So I think it's really a function of critical mass. Right now, 99% of volume is done on centralized exchanges, but I think as the centralized exchanges begin to develop, you'll see some order flow. I think in the major coin pairs, because the smaller ones just don't have liquidity. And what we're actually going to do with the SPA product is work with decentralized exchanges to move some traditional liquidity into those matching engines. And so I think that will help them create that liquidity, because institutions have to enter the space, and by providing liquidity from decentralized places, you can actually greatly effectuate their ability to trade, specifically even with dark pools. The dark pool product that we're building is going to work with decentralized exchanges to gather liquidity across the space. And so the counterparty of that is going to be the institutional flow that we're going to receive. And so that's going to, I think, hopefully help drive the volumes there. But right now, it's just a matter of critical mass, a matter of chicken and egg. There's no volume, so nobody trades, and if nobody trades, there's no volume. So you need to have somebody seriously use those places. I think AirSwap is a great concept. I think they're going to do well. Kyber is, I think, going to do something. Republic is building a decentralized dark pool, which is really cool. So some of those names are, I think, going to be in play, but it's going to take some time to build those volumes up before it really becomes a factor in the space.
Yeah, as you're saying, I do believe too that this year will be the year kind of we see more infrastructure and things build up, because it feels like we're actually at that point where crypto's being a lot more widely accepted than it was in the past, and people are taking it way more seriously to be creating all these projects and such.
Yep. Yeah, it's really reached this will be the year of real projects. You'll see like projects that raised a bunch of money, if they're going to be able to deliver. You'll see projects launch with actual products instead of promises and white papers. There's more scrutiny around why people are raising money and how they're raising it, and what it's going to be used for. There's a lot more scrutiny on the team, their experience, and their ability to actually deliver on the project, and not just be able to collect money theoretically to do so. And so that's natural, I think, a progression from what happened in 2017, and that can only be a good thing. I think a lot of projects will fail because, simply put, they either don't have the experience, or they simply maybe didn't set out to deliver a product. Maybe they set out to raise funds in the token sale, and that's unfortunate, especially for the people that purchased those tokens. But at the same time, it's also going to create a better ecosystem. I think the project's going to be more curated, and I think they'll deliver more value and actually achieve some of their visions. And I definitely think that what we're doing is, really an infrastructure play is very suitable in that type of environment. And I think others will come as well. They're going to solve very basic and very simple problems in a very elegant way. And I hope to see those guys come along soon. I know a few guys that are building some awesome stuff, and I can't wait to see what they're going to come out with as they go live. So I'm excited for the space, and I look forward to seeing what's going to happen this year.
Another development is, we kind of touched on this, kind of compliance and more standardization. And do you think that, since all these more legitimate projects are here and coming out, do you think this will actually kind of drive more people to start looking toward compliance rather than just forgetting about it and say, oh, we'll just wait until something bad happens to respond to it?
Well, the way the regulators act, at least in the United States, is that they typically pick a few projects that are doing the very, very, very wrong thing and make examples of them. And what happens there is that once those examples are made, everybody else falls in line. So you saw that with Munchie, with their promotion of their utility token as essentially an investment vehicle, without any legal opinions or advice. And you saw that with guys who created tokens and created projects, rather, didn't actually create tokens, just collected money, or just created large amounts of fundraising without delivering a product or building a multi-market MLM type of pyramid like BitConnect or whatever that was.
Yeah.
And so I think as those projects become regulated and the regulators kind of do their job and make those examples known, you'll see the newer projects kind of pivot from a free-for-all into more of a responsible model. And then so that's going to basically create an ecosystem where people that kind of purchase these tokens in the pre-sales and the crowd sales have a better understanding of what a real project looks like, and the funding will kind of drive those projects to meet certain criteria. And so the market forces, I think, will streamline that, and people obviously won't want to take ridiculous risks related to creating tokens that might be securities, or just not delivering, or whatever, or raising way too much money, or trying to raise too much money without having a legitimate basis for doing so, because those projects simply won't garner any funding. And so I think all those factors will combine to create more compliance, albeit voluntarily compliance in the space, but that's definitely coming. And I think there'll be more regulations, hopefully common sense regulations in certain jurisdictions that will at least create some risks for those people that do the wrong thing, and create incentives to follow the proper channels to make sure that the people who buy these tokens are not essentially scammed.
Yeah.
And so that's super important. I think it's going to happen this year, and you see it happening already with some of the regulatory commentary and some of the actions that the regulators have taken across the world. I know it might not be a good thing in most people's eyes, or in some people's eyes at least, but I believe it's necessary to protect some of the people that invest in these tokens, because they may just go off the fact that there was a 400x return from last year. If I bought Ripple, I'd make a 35,000% return. And I remember I was interviewed for an article in December on money.com, and they asked me, why Ripple was overvalued, and I said, look, Ripple's at that point I think had a $70 billion market cap, and then if Ripple went up 10x, it would equal to 7 trillion, which is like, or 100x, whatever they thought it was, which is like literally the price of all the gold ever dug up by the Mayans and everybody else ever in the history of the world, right? And so that's unrealistic, and people don't understand that. People just think, oh, Ripple's $3, it's going to go to 100, just like Ethereum did.
Yeah,
people don't really.
Bitcoin.
Yeah, just like Bitcoin or Bitcoin. All this stuff is just a lot of these coins, they have no intrinsic value. Like even Bitcoin really has no intrinsic value. There's nothing that's backing it as an asset beyond the fact that there's not a lot of it, and people are buying it as a store of value. At least in my opinion. And so you really have to look beyond the hype and the speculation surrounding the market, and more towards like, what are these coins actually worth, and what are my long-term risks? And unless I'm in and out as a trader, holding them entails what, and what are these projects going to deliver? And so I think there's going to be more of that realistic approach to cryptocurrency trading this year, because in the game of musical chairs, eventually the music stops, and the last guy who didn't sit down, or the last guy holding the back, if you will, is the guy who's going to buy Bitcoin at $20,000. And so I think you'll see more realistic approaches to the space, which is actually good for it, because it's really, really frothy right now, and I think it needs some semblance of reality to set in for people to understand exactly what's happening, and to kind of quantify some of the risks, but also make better strategic decisions when it comes to their investments. And I think curating the right projects is a great step in that direction.
Yeah, I've already been seeing a lot of newer things that are coming out or just came out there, focus more on actually utilizing their coin or token, and then also some are saying how they're kind of using the revenue-backed tokens, and you also see that kind of in the exchange buybacks, how they're using like 10% of their profits or whatever to reinvest in their exchange coin.
Right. So that's more of a security token.
Yeah.
And that's a trend that's kind of developing, where people kind of just want to say, okay, this is really a security that I'm selling, and so I should just really call it that and register it as that, and therefore create an environment around it that defines it as such. I think there's still room for utility tokens as long as the use case is properly there. But yeah, security tokens are coming. There's a few really cool projects that are launching them. One is Spice VC, a guy named Ami is running it. That's a great project. They're actually facilitating security tokens across the world. They do KYC in each individual country separately based on accreditation requirements. And so their project is fantastic. I think they have about $500 million committed for security token launches. And so, a lot of these guys are starting to come up, and I think Ami's doing a great job with Spice VC on that and facilitating that ecosystem. Again, the problem there is that accredited investors can't really liquidate tokens as easily as other types of tokens, and so or other types of participants, and so that creates some liquidity issues in the space. But it's just a matter of chicken and egg kind of with decentralized exchanges. You just have to get it done, and then the ecosystem might move in that direction. I don't think it should be all security tokens all the time, and I think there's definitely room for utility tokens. It just has to be the proper application.
Yeah, and also the fact that it seems like from a regulatory standpoint, if you're raising money, you're like automatically in a security token like arena rather than utility.
Potentially, it depends on what the token does. Like if you're, creating a token that's used in the ecosystem that basically allows you to pre-sell, access to your platform, and there's a product that's there before the token launches that, basically means that the network is there for you to use the token, and the token actually has a utility use case. I think there's still room for that, but it has to be very clearly defined, and projects have to follow very specific steps to ensure that that's the case. So, and again, this is a matter of legal opinion, which is constantly in flux because nobody really knows because there's no guidance, right?
Yeah.
There's very little regulatory guidance. And, when you don't have guidance, people just kind of do what they think is right. And then it creates a herd mentality where, utility tokens, security tokens, everybody's running that way. It's like a bunch of 5-year-olds running after a ball. It just depends who kicks it, and that's kind of what I see. But I think the trend is correct in the sense that there's more of a move towards, figuring out what is security and what isn't, and acting accordingly. And I think that's actually a good thing.
All right, so I want to talk about what do you think is the biggest risk that crypto has right now? Because personally, I see that security is one of the major issues that everyone faces. Yeah.
So the biggest issue I think is custody. So basically you're responsible for your own wallet. I think one guy recently sued Verizon, T-Mobile for porting his number so that he lost some small amount of Bitcoin, I think, whatever it was. Essentially it's like buyer beware. You're responsible for your own stuff, and the retail public generally relies on custodians like banks, and unless you're keeping your money in a mattress, somebody's watching over that money and it's insured, and there's a government comes into play, and so with crypto, obviously you don't have that. You're kind of on your own, so that's better for you potentially in terms of taxes and anonymity, but at the same time it creates a lot of security issues. And if you have an exchange, which is keeping those funds also in some sort of wallet system, if it's a hot wallet, it's subject to hacking. It happened in South Korea, where North Korea hacked them and stole, I think one exchange, 17% of their money was stolen, because that's exactly how much they had on their hot wallet, right? Everything else was in cold storage, and everybody had to wait until they got paid out. They got 75 cents on the dollar, I guess, based on however many accounts they had. And that happens a lot. So there's a huge amount of security issues, huge amount of custodian issues. And so I think the next big solution is going to be for that, kind of ensure that it's not so easy to steal people's tokens, that's a big problem. Another problem is liquidity. So because there's so many different exchanges, it's kind of thin. So in a large order, it'll move the market tremendously. And so institutions are kind of hesitant to participate in that environment. And because institutional money isn't there, liquidity is not there, which actually creates more volatility. So it's also kind of a chicken and egg kind of problem. And transparency, obviously, you don't know what a lot of these projects are really, and there's no accountability, there's pure anonymity behind them. You don't know who it is really that's doing it. Somebody can literally just say, "Oh, my token's going to be doing this," and it'll go up, and they can sell all of it, and nobody cares. Nobody can do anything. Everyone's, "Oh, that guy was a jerk," but that's about it. So there's nothing that you can really do. There's no recourse, right? There's nobody you can go to if somebody takes your wallet, and because you put your private key on Google Drive, and there's nobody you can call if the exchange doesn't give you your money, and there's nobody to complain to if somebody does the equivalent of insider trading essentially, and then moves the token in a way that creates a situation where you lose a bunch of money because you buy it at the top Tron, is one particular enterprising example of what can happen in that situation. And so, those are some of the risks. So when you have a free ecosystem that's decentralized, that answers to no one, there'll be bad actors. And so I think some of that should be mitigated with new technologies, with better encryption, with better ways to custody and to handle transactions. And I think all of that is coming, because if there's an opportunity to build something like that and somebody can profit off of it, they will build it. Every conference I go to and all the people that I meet, I see just the smartest people in the room congregating together to create these solutions for the benefit of all, not just for themselves. And I think in the next few years, you'll see some of those movements towards solving some of those problems. So right now they're there and they're endemic. And so buyer everywhere when it comes to that, So you have to be personally responsible. Personal responsibility is paramount in the space, at least in this stage in the game.
Yeah, 100%. Personal responsibility can kind of shield you from a decent amount of risk.
Exactly. Absolutely. Big believer in that myself. So, yeah.
So you mentioned you've seen a lot of other projects in the space. I want to ask a very kind of specific one. See any projects kind of focus on tax reporting? Because I seem like that might be a big topic this year.
Yeah, it's funny that you say that. I actually was talking to an exchange the other day. I'm not going to say which exchange, but they essentially said, a lot of our customers, active trading customers, are asking us to give us post-trade reporting, basically what happened. It's not just what's going on during the trade, but your tax lot and your aggregated trading position sizes and basically everything that a broker-dealer would provide for you at the end of the year. And they don't want to provide it because then they're saying, oh, well, we don't want to show people how much commissions they're paying. Literally, that's the answer. We don't want them to be aware how much they're paying, because if they see that, they'll be like, oh man, that's so expensive. So just they don't have to. And that creates a situation where nobody knows what the tax regulations really are, because they don't exist really. I guess people treat it as a security. And so the opportunity for what we're doing actually is a product that we are building that's based on the post-trade reporting tool. I worked at a clearing firm for many years, so I kind of have a good idea of what has to be built there. And it's just a matter of taking the trading data and then creating a trading report that creates a cost basis and a cost of proceeds. And while most people might scoff at that and say, why am I paying taxes? I don't need to. Nobody will know. There's some organizations like hedge funds and institutions that are obligated to pay taxes. They can't not pay taxes. And for them, without having a system to kind of show them what their taxes are, they can't trade. It's really that simple. And so there's a huge opportunity to build a product like that. And I'm actually actively working on a solution that I haven't announced yet because it's kind of too early in the game. But we will create a post-trade reporting tool based on clearing trading reports for institutions and for active traders. And we think it's very necessary. And then IRS will not issue guidance off the bat, but they'll hit a few people until everybody knows what's going on. And I think that's only a year or two away before there's really clarity around how these instruments should be taxed and the formulas that are necessary to do so.
Yeah, the next few years are going to definitely be rife with kind of understanding where we stand compliance-wise with the already existing laws, and people are going to have to kind of get used to that and try to mitigate and kind of be active in the legal system, I guess, to try to prevent more restrictive regulations than we want, but also kind of understand that there has to be something there. Yep,
exactly. Again, not all the way, just a little bit, just to have some transparency. Literally, where's my money? I sent you $100,000. I bought a bunch of tokens. I sold them. I have $110,000. I sent you a wire request for $50,000. You're not responding. Please help. That, or hey, I sent an order and it's not executed. What happened to it? Oh, here's your support ticket. Call us in 90 months. It's crazy. So that kind of stuff, really. But very basic stuff that has to be solved, and it will be, because somebody out there will say, you know what? I'm going to just tell them what's going on with their trade. I'm going to send them their money, and everybody will be like, man, I want to trade there. And guess where the volume's going to go? Who's going to trade at the exchange that doesn't send them their mony? Those exchanges are going to disappear. It's crazy. It's for me, working in the brokerage firm, that it's just crazy. You literally have to account. At the clearing firm, you have to file something called the 15C3 report. You have to file regulatory reports pretty much every day, detailing exactly how much money you have that are customers' funds, how much is your funds, and how you segregated the customer funds from the firm's funds. every day. That's required. You have to file that, and that's great because now you have to sit there and count that money, which you should be doing in the first place. And if you're not, if you don't report to anybody, it's like, Jesus Christ, like, what's going on here? And how do you know these guys didn't just spend all your money? You don't. They just tell you have a balance. But where's your balance? Where's the recourse? Where's the regulator that says, come in and says, hey, show me your books. Let me see the customer's balances. John Q. Public has $137 in his account. Show me where his money is. Show me where all their money is. Show me where all their token balances are. Show me why you didn't send them his money. That has to happen. It's crazy that it's not happening. And there has to be some jurisdiction around that, but that's my belief, just from working in that space and seeing how customers need it to be treated and trying to do the same for whoever I can, with my platform.
All right, Alex, it's been a good talk. I'm giving you the last little bit here. Just have the floor, talk about whatever, promote your project.
Oh, cool. Thanks, man. Yeah, so we're launching Xtrade.io. Again, creating financial products in the cryptocurrency trading space to make it better, to make it faster, and to bring those products to a space that needs them. We're launching our token sale Q1 of this year. We're raising a $45 million hard cap. Most of that is actually for liquidity aggregation across multiple markets. And so we're going to launch our public pre-sale in February 20th. We've already done pretty well with the whitelist. We have actually pretty much oversubscribed at this point, but we're still collecting, indications, and we're looking forward to getting the token generation event closed out, and then to launch into the production phase of our project. We have a lot of clients lined up that are willing and very happy to use the platform, and we're very excited to build the stuff that we think is going to help the space. And I think after this podcast, you kind of have a good idea of where I'm coming from and what I think should be happening. And, I believe me when I tell you that I will act in that direction. And so please visit our website, xtrade.io. Join our Telegram, join our social media, join our whitelist, join our email list, and, please get involved in our community. We'd love to hear from you. And we look forward to a fantastic 2018 for our customers, and for us to deliver on all the promises we made so far, including the one that we actually have in production. And so that's kind of where we're coming from, and we look forward to a fantastic 2018, 2019, and some interesting developments in the cryptocurrency space, and hopefully a little bit more regulation when it comes to some of the transparency issues. So that's my last word. If that helps.
Well, it's good to have you, Alex. I'm sure a lot of people learned something with your Wall Street input, and we'll probably, I'm sure there's going to be a little bit of discussion with some people considering the regulation talk we kind of had. But I really enjoyed this, learned some things, and I hope all the listeners will also enjoy it as much as I did.
Awesome. Yeah, glad to at least be entertaining. If you disagree with me, at least you hate me for a good reason. So thanks very much for your time, Cameron. It was great talking to you, and look forward to doing this again in the near future. And good luck with everything. Thanks very much.
Especially, yeah. So glad to have you. And this has been another Crypto Spin interview session with Alex Kravets of Xtrade.io.
Thanks, guys. Take care.